The cost of the Ukraine-Russia conflict is being paid by global economies. The conflict, which began nearly a month ago, has pushed up prices of various commodities. Prices of building material, for instance, have increased significantly in the past 3 weeks owing to the conflict and supply chain bottlenecks in Australia. International petcoke prices rose 57% in the past few weeks and could rise further if coal prices remain elevated. Moreover, the rally in crude oil prices will also lead to more hike in diesel prices. One of the key users of these raw materials is the cement sector, which has been seeing consistent price hike since November 2021. The sector has exited the December quarter on an already rough patch, marred by weak demand. The geopolitical crisis has only weakened the near-term outlook further. On the bourses too, cement stocks have corrected sharply in the last few months. The likes of JK Cement, Ambuja Cement, Ultratech Cement and ACC have plunged up to 31% thus far in calendar year 2022. In comparison, the BSE Sensex has slipped about 1% during the same period. These higher costs, analysts say, will impact cement earnings in the near term. Global brokerage Jefferies has cut its FY23 operating profit estimates for the sector by 19%. It said earnings visibility has sharply declined for the Indian cement sector due to the unprecedented increase in costs. The industry needs to take an 8% price hike for every $50 per ton increase in coal plus petcoke prices just to maintain its operating profit per ton. That said, analysts believe that the current headwinds are transitory in nature as likely price hikes by companies will help aid their margin pressures over the midterm. Besides, they feel the current elevated international coal and petcoke prices are unsustainable in the long run. Let's listen to Gaurang Shah of Geojit BNP Paribas to understand his take on the sector.
So even if the concerns are there in terms of earnings dent, I don't think it will be a prolonged kind of hit for the cement manufacturing companies because eventually they'll pass it on. In terms of offtake of cement, I expect a good month-on-month numbers over the next couple of quarters, given the fact that, number one, you have government spending on infrastructure. You have the announcement made by the Honorable Minister that 25,000 kilometers of road are going to be constructed. Now that all is going to be by default cement concrete roads. And you have other schemes which the government is spending where cement consumption will be high.
Vishal Periwal of IDBI Capital expects cement players to hike price for the April-June quarter in line with the recent increase in diesel and petrol prices.
Now, on the positive side, what I find is the demand is still strong. Okay. And then second is the price hike, it was muted till now. But I think today, the central government, they have increased the petrol prices again, cylinder and all, they have increased. So historically, what I have seen is when the central government start increasing the prices, and then the other player, whether you talk about any other industry, they start increasing the prices for them.
Shah of Geojit BNP Paribas sees cement stocks as contrarian bets. He advises investors to buy select stocks in a phased manner.
So when the market is underweight, I think you should think out of the box that these situations are not going to get prolonged for a longer period of time. Be stock specific, concentrate on large cap first and then the select mid caps, and whatever dips you get, start allocating maybe 25-30% now, and as you get corrections, you may add on to the stock.
ICICI Securities, meanwhile, is bullish on Ultratech Cement, ACC, JK Lakshmi and Sagar Cement. In nutshell, cement stocks are likely to trade range-bound in the near term, driven by volatility in commodity prices. However, the sector is expected to see gradual reset in profitability underpinned by improving demand-supply dynamics, better price discipline and cost optimization, and de-risking efforts. On Thursday, weekly F&O expiry back home and US President Biden's meeting with NATO members will be keenly watched by the markets. Besides, they will also track the two-day European Council meeting on further cues regarding banning Russian energy imports.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.